lounge. Yes, it's all about results this morning, and the third quarter numbers for DRDGold are out, a 16% increase in operating profit. This is due to higher gold production and sales. And of course, with me, Niel Pretorius. He's here joining myself and Michael Traherne to unpack those numbers. Neil, thanks for your time. You've managed to increase your gold production numbers, and you did say you needed to tweak a few things here and there last time. So what changes have you made that has put you in this position?
Well, we finally have benefit of full volume throughput in our flotation and fine grind circuit, which we've been working on for the last few years to get commissioned and working to stable state. So that's come through quite nicely for us towards the end of the quarter. And volume throughput was also very good. We managed to, especially towards the end of the quarter, limit the number of interruptions in volume throughput quite significantly. So it was a combination of better metallurgical efficiency and better volume throughput.
Yeah, with increased efficiencies and I suppose increased volumes, what effect has that had on your all-in production costs, your sustainable production costs? I think the numbers I worked out from your previous results, at 12 Rand a dollar, it works out that you guys are producing at less than $1,000 an ounce.
That is correct, yes. Our target for all-in sustaining costs is to get it to below 1,050, and I think we around 1,150 at the moment. A lot of that's got to do with the numbers in the first 2 months of the quarter, so towards the end of the quarter the numbers came through quite nicely and is trending in the right direction. Cash operating costs are also down quite a bit, and because it's measured in units, if you can get your volumes up and if you can get the number of units up, we do have a very high component of fixed cost, then the unit costs do respond quite favorably to that.
Neil, obviously you operate differently from the underground mines, and last time we spoke you said that you have an agreement in place with Eskom and you're less affected. But this round we have been looking at Eskom and the issues that they are currently facing. How have you been impacted, and what are you doing to mitigate this further?
In the beginning of the quarter, the first month, January, we had a number of interruptions as a consequence of load shedding. But Eskom has since become very reliable in the manner in which we implement load reduction. So we've got to drop our electricity consumption by about 10% in the event of stage 1 and 2 load shedding. And they give us a 2-hour heads up, and then we have certain circuits that we can run at lower capacity, or certain sections of the circuit that we can switch off. More often than not we switch off the water pumps because all of our water stays within circuit. It's a closed circuit, and that saves us the 10% in power consumption, and that has negligible impact on volume throughput, which is one of the key drivers. You know, the two key drivers for us to achieve good results are volume throughput and metallurgical efficiency. And because we can reduce our load by switching something off which doesn't have to run 24/7, namely maintaining the balance in the water circuit, the impact on volume throughput is actually quite is negligible, in fact.
Yeah, and then something, I suppose, a key component to your business, and something you can't control, the gold price. Last week, I think it was, Nick Holland was on, and he was saying their view is that gold going sideways is the new up. Is that your guys' view going forward on the gold price?
Yeah, I think so. I think for at least another 18 to 24 months, it's unlikely that you would see gold really trending higher. So today's gold price is really the price at which I believe you need to make your business work. South Africa's circumstances are not unfavorable. The weaker rand is benefiting gold producers, especially since most suppliers of consumables are now supplying at manufacturing costs as opposed to import parity costs. So that's helping quite a bit. So we're seeing actual benefit now from the weaker rand insofar as costs containment measures are concerned. But yes, I think Nick's absolutely correct. You're going to see a flat gold price for the foreseeable future, if not a slightly weaker one, in fact.
While we're talking about cost containment, I just want to latch on from what Michael said. Nick Holland was in studio last week, and we were speaking to him specifically about the wage agreement that was struck at their South Deep gold mine. I understand you've got a wage agreement in place, so that means that you're not at all going to be impacted by the round of the gold sector negotiations.
That is correct, yes. Our wage agreement was extended for a third year, so it's our turn next year. Yeah, hopefully we'll have another year of stable labour relations at our operations.
That always makes in your favour.
Yeah, and then on the balance sheet side, I see you guys are paying down debt. I suppose my understanding of the gold sector is with gold price going sideways or down, it's a matter of the companies with the strongest balance sheets are going to survive over the long run. Tell us a bit more about paying down the debt.
Well, we had about 77 million outstanding in interest-bearing debt. We paid down 55 million of that, so there's another 22 million that's outstanding. We've got just under 300 million rand in the bank, so we can comfortably cover that, and that's where we want to be. You know, you want to have a strong cash balance at this stage, because the only money you're going to spend is the money that you make. The market's not exactly throwing money at the resources sector at the moment.
Is there anything that money's earmarked for going forward? Is it a bit of a war chest, or is it more defence, make sure that you guys are still in the game looking down the road?
Look, most of our big capex is behind us, so the buffer that we used to maintain, I think, can be shrunk a little bit. We've got a comfortable facility as well. We've got a 100 million rand revolving credit facility, which we've never used, but which we're paying to maintain. So I think we'll probably look at our cash requirements and the sort of buffer that we want to maintain with that in mind as well. So I think we might be sitting on a bit of surplus cash towards the end of the year. And our policy is not to sit on that, to rather either give it to shareholders, or if the share price is undervalued, to buy back shares.
So then we might be seeing a dividend being reinstated.
Yes, and unless the share price, the shareholders don't start rewarding the performance of the business, then we might just reduce the number of shares out there.
Thank you so much, Niel. That was the Chief Executive of DRDGold, Niel Pretorius.